Hello YouTube, I'm Duarte from Still Not A Millionaire and welcome to another video. Today, Monday, a new week has just started with the market opening a bit lower but ended up higher, but not sufficient to pass this previous resistance that is close to $122.6. Okay. If you saw the previous video, I made a trade on Apple in the previous Friday, okay, in the last week, but well, it was around this candle, this red candle. The Apple ended up opening lower, significantly lower today, but closing higher near also the previous support I identified close to $110 per share. Okay. This week, I think, is going to be marked by more discussions regarding the lockdown. Okay, so Israel has already implemented more lockdown measures. UK is also talking about it, and I think that we are not far from the time of a second wave. So this topic might gain more terrain on the agenda of governments. Okay, so I don't know if the markets, at least they seem to be trending down. Okay, they seem to be breaking this. I'm watching Nasdaq. Okay, S&P is similar, but they seem to be trending lower, and this can create a good entry opportunity for to acquire long-term stocks. And today is precisely what we are going to talk about. How am I going to choose long stocks for long term? Okay, in the short term, we want to try to take advantage of this type of swings. As you saw in the previous video, I wasn't very successful, but I hope that with time I'll get more experience and things go better. But when choosing stocks for a long term, what matters is fundamentals, of course. Is the company able to sell? Which are its margins? Is the company prepared for what's expected for that industry, and so on? Okay, and I don't know if you have that many time to analyze each company individual and the industry and so on, but I don't have that much time, so I need to arrange a sort of way. I need a way so that I can do this analysis the more efficient way possible, and also quantify it, because in the long term it's also important to quantify, to define a target price for your share in order to know if it is undervalued, overvalued, and if the difference is meaningful. Okay, so if you find, for example, that the stock is undervalued 5%, it probably doesn't mean much to you probably shouldn't buy the stock right away, because well, this valuation is always subjective. Okay, it will depend on the assumptions you make, and those 5% can easily be covered if you change only one input on your valuation. Okay, well, but the idea is this: I will rely mostly on one website, that is finance.yahoo.com, that you probably already know. I'm just opening it. It has a lot of information if you want to follow the markets, or if you want to, for example, quickly find the financial statements or the price chart or the analyst's expectations of a company. Okay, and I made this example not only for the matter of example, but also because I'm interested in buying this company in the long term. That is Visa. Okay, that is a company that operates in financial services. You probably already know. Okay, and is responsible for the transactions. Most payments that you do, you are interacting with an intermediary company like this. Okay, your cards are made from this company. You probably have one card from Visa, okay, or Mastercard. There's also American Express, and these are the three major players in this segment. Okay, and as you can see, you have a summary. You also have if it is according to the fair value or not. I don't like to use blindly these estimates that you find on the internet. the best thing is to do your own analysis, of course, if you have the time. But what I wanted to select here is basically, well, select just a summary of the company, that just to understand what the company does. Okay, the price behavior of the company, okay, is also important to know if it is in the close to the higher high or lower low. Okay, well, it depends on your strategy. For me, it's important to also know, have a perception of how price behaved in the past. Then I want to also summarize quick in just some sentences how does the company makes money. Okay, basically, these companies take a commission from payment transactions. Okay, and it has other value added services, such as solutions, consulting and analytics, fraud management, and so on. Okay, and what is expected from the industry? For example, Visa Direct and contactless should be a trend for this industry. Now also motivated by the COVID virus, but also due to the it's more efficient basically, and people don't need to be always memorizing the password, the key for their cars. Okay, there are some key numbers. Okay, this is a company that is uh, giving a lot of return to its shareholders. Okay, in 2009 it has spent around 10.9 billions in dividends and share buybacks. Okay, more than 19% than the amount spent in the previous week in the previous year. Okay, which is also good. It's another form of return. Is also the dominant player in the segment. Okay, for example, from the 201.9 billion total transactions, almost 140 billions were processed by Visa. Okay, representing 68.5% total transactions. I haven't made I haven't written down here the main costs of Visa. Okay, but I think that it's pretty clear. It has some it is also a services company. Okay, so it relies mostly on people, and this is expected to be one of the highest costs accounts in its financial statements. Okay, but of course I advise you to do a more thorough analysis, and if I this is just a quick analysis. If I truly plan to invest in this company, of course I will dive deeper into its financial statements. Okay, I have some of course some expectations for the industry, and how is the company prepared. Okay, so despite this dominant, this leader position, it is competing against Visa competes basically against all forms of payment. Okay, including paper-based money, which I believe that is losing its importance and will eventually disappear in the long term, and all other forms of electronic payments. Okay, even blockchain technology and digital currencies, this also competes with that. But I don't think that these need to be mutually exclusive. Okay, I think that the company will be able to adapt itself and continue to maintain its position. Okay, so after this, it's important to quantify these numbers, and for it, based on Yahoo Finance, okay, because I wanted a quick summary. You can gain access to these quick financial statements if you come here to financials. Okay, and now you have both. I think these are annual data. Okay, you can select here if you want quarterly data. Well, not here, but you can find it somewhere. And you have income statement, you have total revenue, gross profit, so you can retrieve the margins and so on. You also have some interesting items such as normalized EBITDA, which basically eliminates unusual items. When you want to forecast for the future, you most of the times want to take out the effect of these extraordinary, these punctual items. Okay, and well, you have plenty of information. You also have a balance sheet, of course, and you have working capital already computed for you, invested capital. Of course, that there is a trade-off when you use this sort of quick values. You don't know precisely what they are incorporating. Okay, there are several ways to calculate the working capital. We can be more precise, or we can take a more broader perspective, but nevertheless it's a great way to get a notion and to see if the company is truly interesting for you or not. Okay, and that is precisely what I made. I'm reading one book that is called Valuation from McKinsey, and the authors define there are in fact three main sources of value that we need to pay attention when we are analyzing a company. First is growth rate of sales, okay? But this growth rate, even though it might be, you might think that is the main source of value that the company, the most important source of value of a company, this is in fact, in the author's opinion, not the most important, and instead it is the return on invested capital, ROIC, okay? Because this will basically tell you, well, even though the company is growing its sales, okay, what is the company being able to do with that money? And this is basically the return that you make, okay, that is calculated as EBIT times 1 minus T, because we want to adjust for taxes. Taxes is an expense, is a payment that you must do to the government, and we divide this by the invested capital. Okay, working capital is also a sort of invested capital. As I said previously, I still need to study more these numbers that Yahoo Finance give in order to see which accounts are already here, in order to avoid eventually double accounting the same item, for example. Okay, but nevertheless, as you can see, we see a growing return on invested capital, which is great. It means that the company is being able to generate more value to its shareholders, and also additional, while increasing also the growth rate of its sales. So these are two great factors, and it suggests that in fact this company has a lot of potential to be the first stock on my long-term portfolio. Then I also made a sort of discounted cash flow analysis, but this was a very quick analysis. I basically computed the free cash flow for the past 3 years just to see the evolution. Okay, there's a huge increase from 2007 to 2008. Okay, mostly motivated by the increase in EBIT and also the decrease in the working capital. Okay, basically suppliers must have gained more importance, or there was a reduction in inventories and account receivables. And then for in 2019 it decreased a bit, okay, $3 billion, but nevertheless this was the free cash flow that I assumed for the long term. And in this simple model, I'm not estimating the growth rate of sales now, and the structure, the cost structure, and how margins will evolve. Okay, I'm just assuming that this free cash flow would grow at a constant rate, okay, which we usually call perpetuity growth rate. I've defined the WOC based on you probably already know, the Modaran database. Okay, if you don't know, just Google it and search for WOC, and which stands for weighted average cost of capital, and I can then retrieve the perpetuity growth rate, adjusting it for the net debt. Okay, I'm not considering other non-operating assets and non-operating liabilities. I'm just making a quick analysis, taking out the net debt of 2019. We reach a perpetuity of around $500 billion. Okay, but of course this value is quite high, but this assumes basically all the free cash flows that the company would generate until perpetuity. That's why it is so high. When we divide it by the total number of ordinary shares, we reach then a value per share of close to $232. Okay, now let's see what is the current share price. Okay, I've placed this here, but it was when I made the model. Let's see how it is. You can go either to TradingView or here, for example, and the previous close is at $202.61 per share. 22.61. Okay, this means that we have an upside potential of around 14.51%. Okay, I'll also plan to consider other indicators here. Okay, and with time I will make this strategy, make this analysis more detailed and more comprehensive, but at this time this is what I'm planning to do in order to select the stocks that I'm planning to trade in long term. As you can see, Visa, which I've already here, had a negative day today, decreasing about 2.55%. But as I said previously, I think that the market is still in a sort of correction. Okay, I don't like very much this kind of trend. Okay, this was a quick recovery, and in fact, when we look at the economy, it doesn't seem to be recovered at all. Okay, and well, I'm a believer that there is something still coming out there, so I prefer to wait. Okay, I will do this kind of analysis, but until then, let's be conservative and keep our liquidity to take advantage when the time comes. Okay, so I hope you enjoyed this video. If you're like me and you are also out of the market, tell me which type of stocks you plan to trade in long term. Otherwise, I hope that you are making a profit. If you're not, don't lose hope, because, well, things don't always go as we plan. Make sure to subscribe and leave your like. If you have any question, leave it also down below, and I will see you on the next video.